What's going on, Velli?
What's good, money? We're back again with another one.
Yeah, back again with another one, Ep.4, season 1.
Yes, sir.
Yeah, man. Just like the last topic, we had to get a little dark. It was a little gritty. But now we have to talk about how to actually get it. See, with stocks, you already know how to get it, through these apps and exchanges. But with cryptos, it's more of a responsibility. So not only that you know how to buy it, but it's important to know how to store it too, just like I talked about in the last episode. So you're going to have things like wallets, like software wallets or hardware wallets, which I'm going to explain the different types of wallets in a minute. But right now, I'm going to go through, the different exchanges like Coinbase. Then you got exchanges like Metamask. So that's what people will most likely hear, that are new. They'll be like, oh yeah, I heard of Coinbase, or like, oh yeah, I heard of MetaMask. So I'm gonna be talking about the common ones first. So with Coinbase, like you can either go on Coinbase on your computer or phone. So they got the website and then they got the app too. So with Coinbase, it's easy to buy crypto because you can connect your bank account and your card. So you can just get the cryptos off there. The only difference is, they're limited, compared to a lot of exchanges, but they're the easiest way that I could think of. Crypto.com the same way too. I would use that as an alternative. But yeah, definitely exchanges like Coinbase. Now you got exchanges like MetaMask too, where it's not only an exchange, it's a wallet too, but it comes with a built-in exchange where you can swap for coins. So like if you have Ethereum, because it is Ethereum based, and then if you want to get something that's made from Ethereum, like Chainlink or something like that, you can definitely swap with it because it has because it's a decentralized type of exchange. So I'll go in the difference between like centralized and decentralized exchanges. So with the decentralized exchanges is like, you don't need to put in that much information, or no, not information at all. To get in, you can have your email and then password. Well, no, just your password. So you can just go right in and do what you need to do. But with the centralized exchanges, like you need to put in more personal information. So if you was to set up your Coinbase account, like you would have to put in like your bank information and then, your ID. Also, you have to take pictures of your driver's license and then put in your phone number and what country you in, like that type of information. So like they're doing a background check on you. So that's what you have to do within centralized exchanges. Same thing with possibly, yeah, same thing with crypto.com, possibly. No, it's definitely same thing with BitTrue. Now BitTrue, I didn't name before, but now I'm naming it now because with BitTrue, it's a bigger exchange. So you do the same thing, put your phone number in, put your Google Authenticator in, have your ID on you, but you can trade like in a different way that you can't trade on Coinbase too, because you can limit trade. So you can deposit your coins and then look at like the open trades and then whether you do a limit or a market trade. So that's the difference with centralized exchanges and then decentralized exchanges. There's other decentralized exchanges like I'm gonna just name a few: Uniswap and OneInch, that do the same thing. You could just go in, connect your wallet, and swap for the coins. So it's easy. So it's easier, for the making exchange in these decentralized exchanges. But that's if you got to know how to do it first. But for connecting your cards and stuff, it's more for the centralized exchanges. So that's it with the exchanges there. Now I'm gonna go over wallets too, because I did mention that you have to store your cryptos properly. So there's different types of wallets, because like a lot of people, just like that example I made in the last episode, a lot of people just storing their cryptos on the exchanges. No, they're meant for you to buy your cryptos and take them off. unless you want to get them stolen because you're giving them control of your keys. Like you don't really own your coins if you keep them on the exchanges. Like that's how they're different in stocks. You can keep a stock in an exchange, but you can't keep your cryptos in the exchange. You have to find a way to store them properly, which is in a wallet. So there's hardware wallets and then there's software wallets too. So I'm gonna go over the difference there. Now, I mean, what they have in common is storing your private keys though, because your private keys are the keys that you write down and don't let people see that information, if you don't want to get your cryptos taken from you, because that's how you really own your cryptos. Now the public keys is what you share just in case you want to send your cryptos or get paid, you know. But other than that, yeah, your private keys is what you don't share. So that's what they got in common. You got to write your private keys down on each of them. But what the hardware wallets, like you're completely off the computer. You ain't on no browser, nothing. Like you have your keys like on that drive because it comes in the form of a drive. So I'm gonna give two examples. Like there's Ledger and NOS, and then there's Trezor. The two most known ones. So you type in, so you set a password, and then you also write your keys down, and then you still have to connect them to a computer, but they come with their own app, by their own company, so you can access the wallet just on your computer, but it's not going to be on a browser, nothing like that. And then for the software wallets, those are the wallets you download. I mean, they can be on a browser too as an extension, but I'm gonna go over the ones you download. So there's the ones that can be like on a phone or on a computer. You download them and do the same thing you would do with a hardware wallet, like set your passwords and then write down your private keys. And then whatever coins they support, because you got to look to see what your wallet supports, whether it's hardware or software wallets, they support a certain amount of coins. So you have to be aware of that too. But you can still store a lot of coins, especially nowadays, and so it wouldn't be no problem. So that's for the software wallets right there, and there's different types too, like Exodus, and then like Metamask too. So and then there's there's another type of software wallet that's in the browsers. I call them browser wallets. So they're like, for an example, a Chrome extension, like Google Chrome extension. So you go in extensions and then you add the wallet there. So when you go in Chrome and then you click on that puzzle piece, then there's a wallet right there as an extension. MetaMask has an extension wallet also. So, and then you do the same thing. You set your password, you write your keys down, and then like your cryptos is stored better. Like all these options are way better than on the exchange. And then the most secure, known to be secure is the hardware wallets, because you have them on the device, kind of away from the computer. But all three of them are good options if you're trying to store your crypto properly. So in terms of cryptos, that's how you, like, this whole example that I'm giving is how you buy them and how you store them. Because they got their exchanges, but then you also got to look at their wallets too, and make sure you look for the ones that are legit at that. That goes for both exchanges and wallets, because there can be fake exchanges, then there can be fake wallets too. So that's what I got for the crypto category.
Real quick, Money, which wallets are some of your personal favorites?
Oh man, that's a hard one. Okay, I'm a name some. Okay, Exodus is one of my personal favorite. And then let me see. Right now, MetaMask is too. So Exodus and MetaMask when it comes to software wallets. Right. And then see, for hardware, my two favorite hardware wallets are Trezor and Ledger, that are already set in the example. So those are my personal favorite wallets right there. And my personal favorite exchanges are Coinbase because they it's that easy to get. Even though they're limited, it's still easy to get because you can use your card. Once you get your account set up. Because I mean, even though I know how to get these cryptos different ways, I like something simple. And let me see. And my other favorite type of exchange, I mean, it would be a decentralized exchange too, like Uniswap. Um, and I'll add Bitru in there because there's a lot of options too. But you trade in a different way though, you know, and trading pairs where you use a crypto to get another crypto, but they have a whole bunch of options. So,
Okay. I like that.
so yep. So that's me on that subject.
Now, when it comes to the stock market, it's pretty relatively easy. You're gonna hear some similarities with the crypto exchanges when Money was talking about the centralized platforms. Whereas like example would be Robinhood or Webull, you do have to put your information. That's just how stocks are. I don't think you're gonna find too many exchanges where you don't put your information in because stocks are already kind of heavily regulated through government. So there's no decentralized really version of that as far as I know. But the different exchanges with stocks, there's a one example would be Robinhood. I'm pretty sure most of you have heard of Robinhood, and Robinhood is probably one of the easier ones to navigate and use as far as an exchange. 'Cause Robinhood was basically designed, for easy use for the public, for the common person. Either you're just getting into stocks, or maybe you're more of a intermediate investor. You've been doing this for a while. Robinhood is kind of for everybody, but it's mainly made for easy of use for the normal person. There's some other exchanges like Webull. Webull's a pretty good exchange. It's okay to me. I'm not bashing it. I just don't like the way the metrics and the analytical side of like the graph and charts of Webull. But as far as how does it work, it's a pretty good app. And
Right.
then you have TD Ameritrade, which is one I'll be definitely switching over to in the future. For reasons I'll tell in the future. It's nothing really bad. Again, I like the way the metrics look on TD Ameritrade. I feel like I'm more comfortable with their aesthetics. Now with Robinhood, you can definitely do it on a computer, but like I said, it's more of a modern thing, so you can easily download Robinhood off your phone. They have an app, easy to use. I've been using the Robinhood app. I've even made options trades consistently off of the Robinhood app. Webull as well. You can do it on a computer as well, or they have an app too. There's another exchange too, Tastyworks. I haven't really dove into Tastyworks myself, and I'm not even sure if they have a phone app. But most of these exchanges I'm telling you about, of course, they definitely have a platform on a computer. But as far as Tastyworks, I'm not sure if they have a app for the phone. TD Ameritrade is more so on the computer. It's a lot easier if you just use it on the computer. Now, as far as like accessibility, is relatively easy. All you need is put your name, birth date, you know, driver's license, that type of stuff, your bank account, and for the most part, you're set up. It's really not that hard. It's pretty simple and it's pretty easy. And I guess if you want to start off with something easy, like I say, you do what you want to do, but if you want something easier, I would probably recommend Robinhood just for ease of use. And if you want, after you use Robinhood for a little while, you don't really like it, or you feel like you want to move on to something better, you can try TD Ameritrade. Weeble's good as well. It's just like I said, I don't really care for the aesthetics of it, but it's still a good stock exchange. So
Yeah. Yep. And then it's good to have your options too. You know, just like we said in the last episode. but we didn't go too much into detail. Yeah, it's good. It's okay to have more than one exchange. More than one source where you can get your assets off of.
Right. Oh, and how could I forget Stash? Stash as well is another exchange. And Stash is more so, in my opinion, is more so tailored to a passive investor. The way Stash is set up, aesthetics, charts, it looks like it's not really meant for like a trader like me trading options. It wasn't necessarily meant for that. It was meant, for people in the truest form, a passive investor, a long-term trader. That's how I see Stash is, and I use Stash as well. And those work. Sometimes I hold some of my long-term and investment stocks. So if you don't care much about trading options and all that other crap, you just want to invest stocks in the long run, Stash is another option as well.
Yeah, definitely. I still got my stash too.
Yeah, like I said, same here, still got it.
Yeah, all these cryptos, I still got stash, and then yeah, you're right too. It's built more towards the long term passive investor because of the way it's set up. Just like automatic payments of these stocks of certain stocks if you set it to, or just or put money automatically into your cash to invest until you decide what to do with it.
Yeah, then they have a diversity section, whereas you don't want to, even though we tell you to do the research, but say you still don't want to do too much research, the stash system will automatically invest the money you put in into the stocks it thinks is good enough to invest in, to put it in towards. Like you don't feel like doing all the hassle, Stash will do it for you. They'll diversify your portfolio for you. And for those of you who don't know, a portfolio, it's kind of like a vault of your stocks, of what you own, whether it be ETF, stocks, cryptos, and bonds. It's literally a portfolio. It shows what you have as for. It shows how much portion of a certain investment you have. Like say you invest more into technologies like Apple or Twitter, stuff like that. It will have a percentage showing you how much of your portfolio is invested into that certain type of category. That's all
Oh,
portfolio is. It's just showing you what you have invested in and what percentage of it is invested.
oh yeah. So you can take out something as little as $5 a week, and then you ain't gonna care about it, and then just see how far that goes over time, especially in a good stock, because you can buy micro shares, buy a piece of a stock at that, make it even better.
Yeah, you can buy pieces. You don't have to buy. Say if again, I always use Apple. Say if the Apple stock was $150, that's one share or one stock is worth $150. You don't have to buy that entire one share. You can buy like 0.012. It can be 0.1, whereas it won't even cost you 150. It might cost you. I'm not good with mathematics. It might cost you $10.
But yeah, and at the end of the day, it all going to add up, especially if you invested in something good, and then you just win a whole year or even 6 months or so. You have $5 a week or just $10 a week. Not even thinking about it. It's just all automatic. And then go back and look
Exactly.
at your portfolio.
So yeah, if you don't feel like dealing with all BS and hassle, Stash can do it for you. That's why Stash can be another good option for a passive investor. Like you're just investing for the long run. You don't want to pay too much attention to it, put too much time into it. Stash will be a good option for you. But again, I'm not telling you to go get Stash. It's just a recommendation. We're not financial advisors. We just like talking about money.
Yep. We're not financial advisors. This is for entertainment purposes only.
Yep, entertainment purposes only.
But yeah, speaking on having different exchanges or different wallets too. Um yeah, you can. I'm gonna go over like which one of my favorite wallets and how they're available too, because there there's wallets that you can have on your phone and on your computer, and then there's wallets that you can just have exclusively for your computer or exclusively on your phone. Like, remember Exodus I just named?
Yep,
Um,
yep.
yeah, I just named Exodus. Exodus is available for both um, your phone. Go on your Google Play Store. I got an Android. I don't know about Apple, but like if you got an Android, you definitely can download it on there, or you can download the whole wallet on your computer. And they also got a YouTube channel too. Exodus got a whole channel, talking about different cryptos too, just in case y'all want to look that up. But yeah, and then let me see. MetaMask is the same way too, but you don't download MetaMask on the computer. You add it as a Chrome extension on the computer, but you can download the wallet. Actually download the wallet on your phone. And then there's wallets like Sync Wallet, available exclusively only for the computer. That's for people who want to take a look at VeChain, or you're investing in VeChain and you're trying to find a way to stake it and earn some VTO tokens. So yeah, depending on what you're invested in, they can be exclusively for the computer, just like what I named Sync Wallet also.
And can't forget the physical wallet, like Ledger and Treasure.
Yeah, if you want it, yeah, you want that cold storage. No,
Oh,
let your trust. Yeah, if you want a cold, yeah, and it's good to have all of them too. Because you never know what might happen. So yeah, if you want some hardware wallets, get you some hardware wallets, and if you want some software wallets along with that too. Because hardware wallets are not going to have everything. And then it's same for the software wallets, but they have different things. Like one have what the other don't. And I learned that over time too. Like I was trying to get some H bar. I was like, man, I can't even put this in my physical wallet. And then that's when I started like downloading the software wallet. Same thing with Cardano too. Because the software wallet held it.
yeah, I guess
But
that's kind of like the pros and cons because the physical wallets they can hold cryptos just as same as soft wallet, but the difference is I kind of want to say I don't want to say more well-known cryptos. Like there is a limit to the different types of cryptos it can hold. Where software, it's pretty much almost anything. But again,
yeah,
everything has pros and cons.
yeah, softwares they do have a lot of options. But yeah, even the wallets don't hold. Software wallets don't hold every single thing. Not just one wallet, but then you have to get more software wallets if you want more stuff too. And so like, and then so when you hear about people investing, and especially they're really in it, like I am, you're gonna be hearing about like, oh yeah, man, I got like what 7 different wallets, and it's most likely gonna be software. 'Cause, I mean that's what I be hearing from people I know too. It's like, man, I'm tired of having all these wallets. You're gonna get tired of having all these wallets too, and then you're just gonna want to. I don't know what you're gonna do, but people tend to want to find where they can just get in and get out.
That's true. And then having a hardware wallet is more of like kind of like having a safety vault. It's like a money vault. Your money vault's well protected just in case something goes wrong. You know you have it on your hardware.
Yeah, yeah, definitely. Just in case something goes wrong, and then and then they work differently too because with the Trezor, they have certain amount of coins they support, but I mean it's already set there. But with Ledger, they have coins they support too, but you have to actually download. You have to download them. So if you want to add Ethereum, you have to actually download the Ethereum like software into that so you can be able to hold it, and it comes with a certain amount of space. So I end up having to get another Ledger wallet, just for more options. But yeah, yeah, each coin take up a certain amount of space. But with Trezor, you don't have to install anything. It's all there, and then you could just put your money in there. So know what you're buying. When it comes to hardware wallets, but they're both good wallets though. They just got their pros and cons too.
All right. It sounds like with the Ledger wallet, like transferring data. That's basically essentially what it is. You're just transferring data from your computer to your Ledger wallet, which is basically like a drive.
Yep, and that's what exactly what it looked like too. These hardware wallets are basically drives. They secure, but they just the process is, they work different from each other. But what they got in common is they got their software that you can download on a computer, so you can navigate through that wallet when you put the USB B coin into it.
Right.
So yeah, so they got the same goal in common. They just got their differences on how you go about it. But they got tutorials, on YouTube. That's how I learned.
Yep, this goes back to research. We can tell you all that we know, but there still might be just a little bit of misinformation or not even having all the information. Just always go and do your research. I can tell you
Yes.
about the greatest car to buy from a certain dealer, but still search up the car, the metrics on the car, what kind of problems does this car has that occurs among certain people that bought it. Do your research.
Exactly. And then when you look up wallets, especially software wallets too, I'm gonna talk about more the cons about the hardware wallets, but I'm gonna dive into software real quick. So even if you hear about a software wallet, or if you look it up, like software wallets that support, like VeChain or Ethereum or Cardano, and then it gives you a name, you still got to make sure it's legit. Because there are people who downloaded fake wallets, and then when they put their coins in there, they had them stolen, and then they didn't find out they had a fake wallet till afterwards. It was like, oh man, it was a fake wallet the whole time, to support certain coins. So yeah,
That's crazy.
yeah, yeah, it's a dangerous game, but you'll be safe, doing your research. You got to literally like check buying everything. So that's what I still do to this day, even though I know what I'm doing. I still got to double check. I was like, yeah, is this legit? And then for like the hardware wallets, you got to make sure this is what I do. I make sure I actually order them from the actual site, instead of just Amazon. I mean, Amazon fine so far, but you know, but what's most recommended, I can tell you, is get them from the actual site where they actually came from. So if you get a Ledger wallet, I would get it from the actual website, or the Trezor wallet, I would get it from the actual website, because there's warnings they can possibly be tampered with if you get it from somewhere else. That's how bad it is. I'm not saying it's going to be tampered with if you get it from Amazon or anything like that, but there's a chance it could, and you want to be as safe as possible.
And the thing with that is, even with being safe as possible, sometimes there could still be a small slip up. No matter how careful you be, sometimes, unfortunately, you would just get hit. I'm not saying it's going to be severe, but just know, even if you do your research, sometimes you're still going to slip up. It's doing your research and being safe doesn't work 100% of the times, but it works 100% lot better than if you didn't do your research.
Yeah, because some people, like they can be as safe as they can with storing their assets, but some can, like, these hackers can trick them out of it. Like, these hackers are real crafty. Like, there's people out there who try to call support, and then they end up calling the hacker. They looked up the support number on Google, and then it turned out to be a hacker. Somehow they connected to their phone. It's crazy.
They said dangerous game out here.
Yeah, it is a dangerous game out there. So that's why and then that's exactly why I said, like, when it comes to cryptos, yeah, it's important to know how to buy them, but it's important to know how to, keep them, know how to store 'em. It's just as important. You don't want to lose all that money.
That's true. That's true. And
So,
speaking of losing money, we're gonna tell you another way how to use your money. And this will flow well into the next topic of the different types of investors.
oh yeah.
Now, off the bat, this goes for cryptos and stocks. There's no difference. You're the same. Like if you're a passive investor, it's going to work the same way in cryptos. If you're an active investor, it's going to work the same way in stocks. There's no difference. It's just on a different market. So, for example, for once, you have two different types of investors. You have passive investors and you have active investors. Passive investors, they're more so focused on the long-term gain. Like they buy and hold shares or stocks or cryptos, even for that matter. They're not worried about immediate profit. That's not their goal. They're looking for the long-term goal. They might see in the future this company or this crypto will probably be worth something. Or not even that, they want to set up wealth for themselves in the future. And what's funny, that's the type of investor money is.
Oh yeah, yeah,
Now,
definitely.
exactly. Now, me, I'm more of an active investor. I still do passive investing. Don't get me wrong, but I'm more of an active investor. Active investors are more into the game. They study a little more. They dive in and research the company, the not refunds, but the returns of the company, what they're making, how much they're making, what they're doing as far as goals and all that, statistics of the company, the fundamentals of the company. We study all that and actively trade or actively invest. And active investors are more so leaning towards the short term gain. Whereas like money, he's a passive investor. He's looking towards long term. Me, I'm an active investor, or like me, a day trader. I'm looking for the long term, short term. I'm looking for the short term gain. I guess you say I'm looking for that quick money. Again, there's more risk in doing that, but again, more money in the short term. Money's type of investing, passive investing, is less risk, and for the time being, it's not much of a reward. But in the long term, years down the road, he will probably make more than me. Short term wise, I'll make more than him, but long, he will outsurpass me because his wealth will slowly but surely build up over time, compounding and just going further and further. Me, I'm just making quick money flips. And so to dive into that as well, as I was saying, there's different types of investors. Like when I said I was an active investor, there's like little subcategories too. You have, which is me, I'm a day trader, which I trade stocks. If I buy stock in the same day, I sell within the same day. Then you have swing traders. They'll buy a stock or share or crypto for even that matter and hold it for days, sometimes weeks, sometimes even months to just find the right position to sell it or buy it in that case. And then you have scalp traders, which they'll buy and sell within minutes of a price swing. They literally do not hold it for long. They're looking for just an immediate drop in price or a spike in price to sell or buy. Those are scalp traders. Now, I'm gonna pass it on to Money so he can talk about his avenue of passive income.
Oh yeah, definitely. Because like Velli said, there's long term and short term. So he's more of the quick money, and I'm more of the long term. So with my strategy, I'm in the position trader category, but I'm two strategies in the category too. So I'm a regular position trader, and I'm also like a dividend investor too. So with my strategy, like I'll keep an asset for a long time, like for a year or almost a year, till I see some appreciation. So then when I see it, whether it's 2x or 5x, especially 5x, I'm gonna go ahead and trade it. But I don't completely cash out though. I actually reinvest. I'll reinvest into something that'll pay me back. So that's how I combine the two. It's still within the same category, but it's like two different strategies. So I'll reinvest into something pay me back, and then I'll just keep building that up. Now over time, it's like not as much right now, but when it appreciate, then I'll make a lot. So that's my strategy right there. And when it comes to long term passive income being the end game, actually building wealth, because there's a difference between just being rich and then being wealthy too. I'm not trying to make my money work for me, but at the same time, I'll make a trade if I have to.
Exactly.
And then yeah, and then there's a king in every category too. So like whether you're a scalper or whether you're a swing trader, day trader, position trader, or or whatever, there there's always like someone that's the best in each category, and then you don't have to stick to one or you can have more than one strategy. You can do short term and then long term, combine the two, or you can stick to one if you choose. But what's known to be the best though is the most rewarding is the long term part. But that but that doesn't mean that you can't do well in the other categories under it too. So you can be a scalper and this be the best in that category and make more than the long term traders, even years after. It's always going to depend on the person, how much they know and what they put their money into.
And especially with what they're comfortable with as well. Because
Yeah.
another thing I forgot to add, there's still differences. Like there's a difference between an investor and a trader. Like again, an investor is more so for the long run, their long term. A trader is more so for the short term. So, I'm an active trader or active investor. It's still kind of the same thing, but I'm trading stocks, whereas active investing, I'm investing for the short term. But like what Money said, a king in every category for passive investing. A great example would be Warren Buffett. He wasn't I mean, I'm pretty sure he's dabbled in it and done it before, but he's not known for being an active trader. He's literally well known for being a passive investor. He
Yep.
literally made his wealth by investing when he was young, and it wasn't immediate returns like within a year. It took time for that to appreciate and in it, buying different stocks, bonds, etc., all of that, and just truly doing what a passive investor does, investing for the future. And now look at him. He's one of the world's most wealthiest men, all off of passive investing. That was his foundation. That's what money does. You don't receive that money right then and there. This is building up generational wealth over time. It's a long process. Like Rome wasn't built in a day, but when it was finally built, you had to take a look at the grandeur of it and how amazing it was. It's the same concept. Passive investing is slow, so slow. It takes time, but once it's finally built, it's truly amazing. That's what money does. And a lot
Well,
of people, passive investing is very low risk, and it doesn't take not a lot of startup money. You can literally start with $1 and build up over time. You want to do $20 every 2 weeks. You want to do $30 a month. That's fine. Do what you want to do, because build up over time. You're not worried about hurry up and dumping your money into it. Your goal is to start. It's that famous phrase, slow and steady wins the race. You're starting off slow so it can build up over time. Me, with active investing, it takes a little bit of more startup money. And like I said, short term wise, I can make more money than him in the short term goal. Even though it's a greater risk, I'm looking at the greater reward for short term. I like making money flips. That's basically all I'm doing. That's the type of investor I am. And I'm not saying you have to stick to one type. I do both. I still do my passive investing, but I'm an active trader basically at heart, because I still want to set up wealth for myself in the future. I'm just also looking for some short term returns as well. I'm still an active trader, but I do passive investing as well. Money is the same way. He's still a passive investor, but he still does his trades. He doesn't day trade. He still does his position trading, and more so, I guess, swing trading as well. If I was to put you in the category, because like you said, you do hold positions, but sometimes it can go a couple weeks and you'll find an angle or you'll see a price spike up and you'll sell some of your ownership of cryptos. Not a lot, just enough to make a flip. But then again, you'll recompound that again anyway.
Right.
So those are like the different variations. Like I said, Money can explain his side better than I can because he does it consistently.
Oh yeah, like reinvest, like I said earlier, reinvesting. Like after I make a certain trade, after I held it long enough to see a certain spike, I'll reinvest it into something that'll still pay me. I just compound it. Like Velli said. Because yeah, you can keep earning interest, or like when you earn that interest, like reinvest your dividends, like you hear like from certain investors too. Whether it's stocks or cryptos, that some of them are going to say either way they reinvest their dividends. So yeah, that's my strategy there. Just passive income, and then still compounding everything and make a trade if I have to. And then which is gonna like I'm gonna lean into this other category. Like how I said, there's like a king in every category too. That works for like where you put your money in, because there because let me see, like, how can I explain this? Like my strategy is to mostly invest in something that's actually gonna like make a difference or that'll change, the economy. But that doesn't mean like people who are investing in video games, you know, are going to do worse than I am, because sometimes, like, if you get into something in the right time, like, for example, Axie Infinity, like you was there from the start, and then you earning crypto off there, you earning all these NFTs, and then you still play it all the way to like 3 years later and everything, and you still have everything. You did everything you're supposed to do in the game, and then everything appreciates. And I'm talking numbers like all these NFTs, like $500, and then you have all these coins that appreciate in the value, all this in-game currency. That like that's how millionaires are made. They made a lot of millionaires off that, like people who don't even have to work. So take that versus people who actually invested in something that's going to be like used in real life, like things making more of a difference. And then it shows you that like sometimes you don't have to do that. You can, yeah, invest in video games, and if you want to, it's okay. But it's always going to depend on the person and when they get into the market. So you can invest in any genre. You can invest in technology or invest in something that supports a lot of big banks and institutions, which I do. Because I see there's a lot of money in there. But then there's people that are going to be making more money than me. Buying meme coins or like investing in gaming when it's that time to go up. No, before it's that time to go up. Like Dogecoin made a lot of millionaires. You know, it was under a penny, it spiked up to 70 cent, and made millionaires, made more, and off a coin that started off as a joke, and they end up making more than people investing seriously. That has the potential to be millionaires in the future. They did it before they did. It just all depends.
And to add on to that, I'm gonna let you, continue. But that's even though this is money side, that's the beauty of cryptos is how quick it spiked up, how quick it made them a millionaire. I'm not saying go do cryptos. It's a quick money scheme. You have the potential to make more with cryptos. Stocks, even though I active trade, it's more of a long term thing. They have blue chip companies, all that stuff. But with cryptos, like I said, Dogecoin started as a joke a few years ago. Even though it's not really the talk of the day, nobody really talks about it. But it made millionaires within a few years, so quick, just off of cryptos. And there's others like that as well. The biggest example would be Bitcoin. Think of those who have invested in Bitcoin, Ethereum. I remember when Ethereum was cheap. Now it's like 3 or 4,000.
Yep.
That's the beauty of crypto. Like, I guess you say it is the future. Like, you can make something out with it.
Yeah, and even though cryptos, there's a lot of opportunity in it because it is the future, and then you can get a lot of them for like pennies and then under a penny. There's somebody that's in in stocks, in just stocks or in options that can still do better because it always depends on the person and then their strategies too. Some people don't have to do cryptos, but it's something good to get in. Especially if you know what you're doing.
Exactly, if you know what you're doing. Like,
Yeah,
and like I said, passive investing. If you like, say, if you don't want to deal with don't want to be an active trader, you don't have much time. I think passive investing would be the best option for you.
yeah, slow and steady, slow and
So,
steady.
slow and steady wins the race. But like I
Yeah,
said, you don't have to be any type of person. You can be any type of investor you want. There's no you have to be this type. No, there's not. You can be any type you want. We just want to let you know the differences. Like I'm an active trader. Money's more of a passive investor and position holder. And then speaking of like kings of in every area, like if if you could say Warren Buffett was like the king in the area of passive investing, there's other unknown like black horses within other areas too. Like for scalping, for example, there's a guy on YouTube. He's a stock investor. His name is his YouTube name is Trading Warrior. This dude will literally go into a trade with like for we could say like 400,000. Within like 5 minutes, he'll leave the trade with like almost 600K. I don't know how he does that. That's not the type. I'm not much. I can scalp trade, but I'm not like that. I don't got it like that. I'm like, how are you doing this? And then to have that much money be put on the table that you could potentially lose, and then make a profit off that. This goes back to having a mental fortitude. If you don't think you have that type of mental fortitude, again, you can do passive investing. For me, active trading, that's like a similar level I want to be at in the future. Sure, I may not get there, but it's nice to strive for something.
yeah. As long as you can master your craft too. I mean, you're gonna stick to a strategy. Just make sure you be the best at what you're doing. Just master your craft.
Yeah, and make sure you're comfortable with it. You could try all these strategies out. Some will work and some won't. Like it takes time to figure out what's kind of like your niche.
Yeah, it does. It took me like I'm gonna say about from months to a year of doing this to figure out what I actually want to do. Now I still learn new things down the line, but I still got my foundation. I was like, okay, I know what I want to do with this stuff. Like, yeah, so sometimes you won't decide until months after trying new things, or sometime a year can pass and then you're finally comfortable with doing something. And like I said, it doesn't have to be one thing. You're probably comfortable with two separate strategies and they knowing how to use them together.
True. And the funny thing is like how I kind of got the idea of options trading was when I was investing in cryptos, I was investing on Dogecoin. That kind of gave me the idea to try options trading. Well, it didn't give me the idea. It's more like what made me fully dive into options. Let me put it that way. It's funny, all for cryptos was decided to maybe go to options trade. I was looking at, again, I'm like, this is some pretty quick money. Well, not quick, but it was a pretty quick returns. I wonder if I could do the same thing with stock because I have, and shares in my portfolio. I was just kind of wondering. I'm like, let me try this options thing out. And before I hopped in it, made sure I did my research. Of course, I failed a few times, but after I started, dusting myself off, trying again, I tried different techniques, different strategies, and I found one that worked for me. And I realized this is what I want to do: options trading. This is what I like.
Yep, and it happens that way too. Especially after you fail and lose money, and then you learn from it. Be like, okay, yeah, I think I'm better off. I see what I did wrong, and now I think I'm better off doing this. You know, and yeah, we all gonna go through it. If both of us went through it, especially, then yeah, most likely, you're gonna go through it too. You just have to spend some time, and don't be afraid to try different things too. I'm not saying go
Yeah,
all out aggressive and then put a lot of money into it, but just test it out. Give yourself some time to learn. Don't panic and don't be too impatient. Just like we said in the last episode.
exactly. Do not be too impatient. And like I said, I'll keep saying it. You don't have the mental fortitude for active day trade, or you think you're not going to make it. You can always try passive investing. That works as well too. There's beauty in passive investing. And like what Money had said earlier about like you could be a dividend investor as well. Same thing for cryptos, like you'll have staking. That's kind of, I guess you could say that's kind of like the same thing. With stocks, you have dividends as well. The thing with passive investors is once you own a certain amount, you don't have to own a certain amount of shares. Like you can own one and still get a dividend return from that. Basically, I don't think we explained it kind of like what a dividend is. A dividend is, it's kind of like when a company holds a certain amount of money, or they have a surplus of money at the end of the year or end of the month, end of the quarter, whatever the case may be. They have three decisions they can make. They can either keep the money for emergencies for the company. They can either spend the money to increase the company and to increase products or make better products. Or three, they can reward their shareholders. And that reward for the shareholders is what dividends is. For owning a share of the company, you'll get a dividend percentage. You'll get a percentage of what they made. Now, that percentage is extremely minuscule if you own one. Like, there's some companies, they'll give a dividend of like, I don't know, we'll say 33 cents per share. Sounds small. Yeah, you're right. It kind of is small. But again, say you started partaking, say you was a passive investor a long time ago. You still are, but you started investing in this company when it kind of was I wouldn't say a startup, but when the price of the stock was relatively cheap. And say you own like, 100 shares. Now, come to today's time, each share is worth 33 cents. You can do the math of that on your own. You'll get that amount of dividend payout every quarter, every year. Each company is different. Some do it once a year, some do it every quarter of the year. So, and then not only that, say you have multiple, of course you will, when you invest, you have different companies that you've invested in. You have Apple, you have, I don't know, McDonald's, you have Twitter, Netflix, a whole bunch of other companies. Some of them still have dividend payouts as well. So you can just compound that. Some investors literally just live off their dividends. They have so much invested, they still invest. They don't never sell their shares or stocks. They purely live off their dividend payouts because they receive so much of it.
Yes,
Some
sir.
live some live solely just based off of dividends, or some still work. Like they'll still work a part-time job. Just I don't want to say to keep up appearances, but just keep they still work a full-time job, but they have extra money now because they didn't have to work for that. That's the dividend payout they receive from the company. And some people receive like $1,000 a month. Some receive $600-$700 a month all together from their different dividends payout. Imagine that, having an extra $700 every quarter that you didn't have to work for.
Yep. And then that all sounds good too. But then, I gotta remind them, it's even that's not gonna be easy because I remember I was like, yeah, let me look into like dividends, when I was still just in stocks. So I was looking at YouTube, and how they have that title, how to make a certain amount of money in a month, or to make
Yeah.
how you look at their
We've all
portfolio.
seen those.
Oh my God, man! You look at their portfolio, a whole lot of like what 100,000. They put like 83,000 to like 200,000. Investing all that money to get like a certain amount a month. So like
Yeah.
even because even with like if you're doing dividends, you have to be willing to invest that money for real and then keep it in there and be consistent. Instead of just keep taking it out. Like some people do. Like you have to be willing to spend that money to make money.
Yeah, that's true, but that's there's a catch to everything. So
Yep.
yeah, with the dividend thing, and remember, like I said, if that one particular stock you get a dividend of 33 cents of a payout, well, again, what's the price of that stock? That stock or share could be worth like $300. So even though you only own one share, you get 33 cents. So you will literally have to continue to pay 300. Or again, as the days and years go by, the price fluctuates. So sometimes it might be 320. Maybe the company's doing real well the next few years. Now it's worth $400. And the dividend payout maybe went up maybe like a couple cents. We'll say 10 cents. I'm not good at math. I'm just throwing random hypothetical numbers. But this is for you to get the idea. Now it went up to 40 cents. But still, you're only getting 40 cents, even though the price of the stock is like $400.
Yeah.
So
Now,
you
now you
literally
see.
have to pour money in over time, over years. This is not something you can do in a couple days, a couple months, even just 1 year. This takes years and years of doing this. This goes back to that passive income thing. Like when Money was saying that that person's portfolio was like 80,000 in there, he didn't put eight. Well, some people can do that and do that, but for the majority of people, we don't have 80,000 sitting around. So what he was probably doing was maybe 100 a month, or even when he was working, he could be working two jobs. He might put 1,000 every month, and he was probably doing that over years. And in the process, he's still actively trading. He might have traded some shares and sold some shares off to receive a return off them, and probably compounded that too. He probably did all different things to get that amount within his portfolio. That takes time and dedication. It is a very hard thing to do. If you want to be a dividend investor, just know a lot of money is going to be poured in that to get a tenth of what you put in there.
Yes, sir. And then that's the con about long-term investing, because not everybody has patience. I seen a lot of impatient people. They ready to take their money out like real quick. So you have to be willing to do it.
Yeah,
That's
me,
what it
I'm
takes, and
patient.
that consistency.
Like I said, I'm patient, but I'm more so like, man, I'm tired of sitting here waiting. Like I want to make some moves. I want to make something happen.
Yeah. So yeah, it goes back to that mental game. Like not everybody's built for that. So that's why there's different categories. And then I'm gonna go in
Exactly.
because yeah, there's dividends in stocks, then there's dividends in cryptos too. But we call that staking, because with cryptos, yeah, they normally pay a higher APY. But when you earn interest off of cryptos, like you're earning either that same crypto or you're earning another crypto, and then there's different types of staking that I'm gonna go over. So you got peer your peer proof of stake, and then you got your delegated proof of stake. Like I'm a like if you have invested in Algorand, that coin, and then as long as you hold it in a wallet that supports it, then you're going to earn more coins. So you don't really have to reinvest the dividends. Like the dividends is already the coin itself, a whole coins that still can go up in value. And then you got delegated proof of stakes, is where you use your coins for votes, and then you vote for these super representatives that they're going to list. and then you're going to pick which ones to vote for. You can vote for more than one, and then you earn that crypto, like Tron, and then you earn even more Tron. But the difference is you freeze that. So if you have like 10,000 Tron or something like that, it's going to be frozen. You still have it. It's just going to be frozen to where you can't move it because you're using it as votes. And then the coins that you do earn, you got to claim them. And then when you claim them, they're still going to be in your total. But the amount that you froze the first time is still going to remain 10,000 because that's what you set it to. And then the way you can, reinvest, you can unfreeze it and then put that Tron, like 1,000 Tron that you earn or something like that. Put that, now you freezing 11,000 Tron to even earn more Tron. So with cryptos, yeah, you can earn dividends too, but they're different from stocks because there's different ways to, that you can stake them. There's like the staking is literally in different categories. But still, you earning passive income either way. That's what they got in common. You can earn passive income from either one of them, and you still got to put that money into it regardless. Like you got to build and build.
And speaking of that, if you think it's too much of a risk to put it in stocks, let me tell you a little story. This goes back to the APY and interest rates. Hey, you remember everybody's always telling you, oh, put your money in your savings account and, it'll build up interest over time. That is true. But make sure you look at the interest rate and how much you earn. Because I remember I put my money in a savings account. Of course, I have a checking and savings account, but, I never touched my savings account. And a year passed up. I just happened to check because I got a notification say, you made interest on your account. I was like, oh, how much did I make? A few dollars? I made $10. Do you know how much I made?
How much?
A freaking penny. I was like, what? I said I could have threw that money into some stocks. I ain't putting no more money in here. I'm like, I still keep my savings account for emergency. But as far as earning interest, I say, yeah, I better get out of here with that. Nope, don't care anymore. Literally a penny. I'm like, what am I doing? I can find more on the ground in a year. I can find more change on the ground in a year than what I earn from the interest rate. I said, I might as well go invest in some stocks. What was I thinking? I'm like, stupid me.
You literally earn more from dividends. Like that 3 cents I earned from my dividends was more than that.
Exactly. I forget one of them. I earned like 63 cents. I only have like 2 or 3 shares of it. I earn more from that.
Yeah, savings account ain't nothing no more.
It ain't nothing. You can earn more from cryptos. You don't even have to. You can have like $10 and earn more than that.
Yeah, and earn more from cryptos. That's crazy.
So you thinking it's too much risk or no money? Just think about that sometime.
Yeah, just think about that too, because there are better options, than banks if you're talking about like, earning more APY. Which brings me to like looking up certificates of deposits. That they're time deposits where you lock your money up, like for a certain amount of time, and then you actually earn more than from a regular savings account. Your interest is higher. But there's a digital version of that, that's a crypto also. So that's called Hex. And then you can look that up if y'all want to. But Hex is a digital like time deposit, a digital certificate of deposit. So that APY is up to like 38%. But even if you don't reach the 38, you still reach a high yield. Like you can reach like 12% easy or 10%. Like when I look up these CDs, and these banks that has these CDs, I'm seeing like 1%, just a little over 1%, 0.8%. And I'm like, man, I'd rather do this right here.
And the most you usually get like even a bank or even credit card is like 5 or 6% APY.
And that's the most. And cryptos are paying way higher than that. Well, there's, a certain amount of cryptos, but yeah. So when I'm looking at this, I'm like, man, this put all this to shame right here. Like you can just literally be your own bank. Might as
That's
well
what
be.
we're trying to say. You don't have to rely on certain stuff. Be your own bank.
Yeah, be your own bank if you want to. It's just we're just telling you, like, regardless, it's not going to be easy. Like, no matter how much of the opportunities you have, like, you have good opportunities now. You just got to like decide on what you want to do, and then you just got to know, like, whether you're doing Velli strategy or whether you're doing something like my strategy. Whether it's passive or aggressive. It's at the end of the day, it's not going to be easy for most people. Some people it is, you know, because some people just get lucky, or they came in at the right time. But regardless, it's you going in thinking it's easy. Most likely, you're going to be disappointed.
Yeah, and I forgot to mention, regardless if you're going to be this holds more true for active investors, but it still holds for passive investors. When it goes back to research, it's going to be easy. You're going to have to learn how to read a chart. I forgot to mention that.
Oh yeah, whether you can read every pattern or just know a few patterns, yeah, like you're going to look at a chart at some point in your life.
If you're doing some type of stocks, and you're talking about, I'm investing in this company, and why is this line red up here? What are these little rectangular shaped patterns? Like, what does this mean? You're going, even if you don't know chart patterns, it doesn't matter. You can never learn a chart pattern. At least learn how to chart. You're gonna have to learn. This is for the
Yeah,
passive investors, and especially so for the active investors. For active investors, this is going to be your best friend. This is how you read and figure out what's going on with the situation.
yeah, that's true. Because even though I'm like not really worried about what pattern is doing what, because I'm in it for the long run, and I'm still getting paid regardless because of the stakes and dividends. I still find myself looking at the price and looking at the chart every day, because you gotta have to learn the basics sometimes. You got to know what the support is or what the resistance is.
Even
Or
just knowing what an all-time
double
high
top.
is, because they can
Yeah,
look at the chart.
high.
Oh, my stock is like $450. It was $430 earlier. Well, if you look at the chart and actually read it a little bit, you will realize this is the all-time high and it's never been at this price. Don't buy at this price. That's just off of that. We're not talking about patterns, candlestick patterns, EMA. We're not talking about none of that. We're just talking about simple, basic reading. You're gonna have to learn how to read a chart.
Yeah,
And I know it
basic
seems
reading.
complicated. Yep, I know it seems complicated. It's not that complicated. It's really not. Once you start getting into it, you'll see how easy it is to read a chart. But at the same time, don't get fooled by it because, oh, this is kind of easy. Don't get fooled by that chart.
Oh yeah, because sometimes you can fall into a trap too. The patterns will pull you sometimes
Exactly.
like a full trap. Uh, yep,
Yep. Sometimes the patterns will fake you out.
yep. You thinking, just because it like one pattern, you think it just because it dropped. No, I was like, oh yeah, it's going to keep dropping. Nope, shot right back up. Because you mistaked it for a downtrend.
Exactly. You got to get the whole entire context.
Yep. And then, they got courses for that too, on basics like on Udemy and stuff like that. If you were, if you don't um if you have a hard time finding out what it is or what we're talking about. But I mean, I'm pretty sure they have this all on YouTube. But yeah, it's not as hard as it sounds, especially if you're talking about the basics. Now, if you're talking about the more complicated stuff, you're trying to learn all these patterns, that's a different thing. But we're talking about the basics, though. The basics.
Yeah, just the basics. And like Money said, you can check Udemy, YouTube. They have courses and all this stuff. And in future episodes, we'll talk about it, but we won't go deep in detail because this is one of those things you have to see it in order to understand. We can talk about certain talking points about it, but this is one of those you have to see it in order to understand it.
Yep. And then this is just, to help better your research, because you're hearing certain things, be like, oh yeah, I'm gonna need to look all this up, what they're talking about, even though I ain't see it. They're saying keywords.
Yep. And this goes back to what I was saying in the beginning of the podcast, where I said I didn't care too much for Weeble, the stock platform, because their metrics and the way I don't like because the way the chart looks. I'm just not hip to the way their chart looks. I have a hard time reading. I can still read the chart, but I'm not comfortable with their chart. Same thing with Robinhood. What's funny is I trade options off of Robinhood, but I look at a different chart than what Robinhood shows me. It's still the same stock, but it's graphed. The way the aesthetics look of the graph is different. I use Trading View. I use Trading View to see the chart or the graph of whatever stock I'm trading options with, like SPY. If I'm charting SPY, and you'll hear me say that in future um episodes when I say I'm charting something. That means like I'm setting up support lines, resistance lines. I'm looking at trends, supply and demand, all that technical analysis stuff. That's what I mean when I'm charting stuff. I'm kind of like deciphering the graph, if you will.
Mm-hmm.
That's what I'm doing. But to do that, I use Trading View. It's a lot easier to understand the chart and graph that way than to look at Robinhood's metrics and try to do it. It's a little harder. You don't get a good idea of what's really happening.
Right. And
At
yeah,
least
yeah.
yeah. Now go ahead.
No, I was agreeing with you too. Yeah, Trading View. A lot of people use it too. Trading View is very popular.
Yeah, and technically start off is free. You don't have to pay any money. But say this goes into different types of strategies where I'm an active trader and I use and this goes into techniques which we'll talk about on another episode in great detail, different techniques. I use technical analysis, but I'm more so of supply and demand. But say somebody that's heavy set on nothing but technical analysis, there's going to be lines and triangulations and resistance and support lines everywhere if you're a technical analysis type of person. So with a Trading View, you can only use a certain amount of or you can only have a certain amount of lines and um angular lines and all that stuff on your chart at one time. You do have to pay a subscription, which is like I think $15 for the cheapest one. But for most people, if you just want to look at the chart and only want like a couple lines, there's a free standard version, no payment needed, no credit card, nothing. You just get the free version, which is fine too. You don't
Yeah.
have to pay up that $15. Even with me actively trading, I still have the free version. And this
And
is
yeah,
me using all the metrics and stuff.
and then a lot of people who are very technical analysis heavy, like advanced on it. Like there, a lot of them be looking at the like the candles, because there's the chart for the candles, and then there's the charts with just the lines.
Yeah, you had the
So
candlestick pattern, and then you have the line graph. I like candlesticks. More people do candlesticks. What you're gonna see on Weeble and Stash and Robinhood is going to be the line pattern.
yeah, so of like um now for me, it's not even going to matter. Like I still look at both, but for me, it's not even going to matter because I'm not technical analysis heavy on like investing, but
Or
since
even
I still
active
focus on
trading.
the basic, yeah, or even active trading, but since I still know the basics, I find myself looking at the chart. Like a line is more for me, because I don't have to look at exactly who sells. I can just look at the ups and downs, like the patterns, as long as I can find the support and the resistance, or like or showing me the all-time high. But if you like Velli, where you're active, or you're advanced in the technical analysis thing, you're more on that side. Then the candles is more in your lane too, showing you like where they sold, or where they bought, and yeah, just the and then what are those candles called? Like the doji, or all these types of dojis and stuff like that.
There's one that starts with an H. I always forget how to pronounce it, but I forget. It starts with an H, and it's a type of candlestick pattern. It's easier to read because each candle, it's called like a ticker time, because each within the chart you have time frames. You can do a 5-minute time frame, a 3-minute, even a 1 minute. But you do a 1 minute, 3, 5, 15, 30-minute, hour, 2 hours, a whole week. There's different time frames, and each time frame will kind of tell you a slightly different story. Because sometimes you'll only see certain things on the 5-minute chart that you wouldn't see on the 30-minute chart. But there's certain things you will only see on the 30-minute that you won't see on the 5-minute. So back to the candles, each candle within each chart, if it's a 5-minute chart, each candle represents 5 minutes of price movement, where how low the price drop and how high the price increase within each 5 minutes. As soon as 5 minute ends, another candle appears. And that starts off the timer again. Wherever that candle fluctuate within the 5 minutes, say if the price is worth $430 at the start of 5 minutes, and it dropped like $2, like to $428, you'll see the candle drop to the $428 line, but somehow say it got back up to $430, or it went higher than $430, it went to $435. Then you'll see that candle stretch and climb back up to the $435 line, and then at the end of the 5 minutes, the price is still $435. It'll move to the next candle. That previous candle is complete. The next candle will start off at the last price, which was $435. And that's how the candle pattern chart works. I'm telling you this, but it's easier for you to see this in action. You can just look this up on YouTube.
I mean, yeah, and then a good example of that is like one of Quincy Jones videos too. Not the Quincy Jones like that most people know. But
That's I thought you were talking about.
nah. Talk about the crypto Quincy Jones.
Yeah, I'm like, I didn't know he did stuff like that.
No, I'm talking about like Quincy on YouTube, the developer, the crypto Quincy. So he's a developer, and then he talks about like a lot of smart contracts and a lot of blockchain stuff. Everything involved with crypto. But he was also at his computer, and then he was on the BitTrue exchange. And then, so he was doing exactly what you was talking about too. Like actually, like he was on the candlestick chart, and then he was scalping though, so he was waiting for like something to go up, and then he invests, and then probably turn it back into a stable coin, then invest again. Like he was just building. Now he was doing this all with XRP, like wait for it to go down. Like he didn't wait for it to go up, he waited for it to go down, started investing, and went back up, and then wait for it to go down, start investing again. Like, yeah. So like, and then people that brings me back towards strategies. Like there's people that's going to be sitting in front of a computer all day doing that, that's building their wealth, and then just some people aren't. They'll look at a chart occasionally, but then still get paid.
Yeah,
but yeah, that's right there.
No, I'm gonna jump in right there because look, even this was my full-time job, option trading. I'm not sitting in front of that computer from 9 to 4 o'clock. Well, 9:30 to 4 o'clock. I'm not sitting there. After this is personally me. If like 3 hours or 4 hours go by and I can't find a good position or a nice setup, or I just don't feel right, I wouldn't say I don't. Let me not use feelings. It's like an instinct, like something's just not right. I can't find the right setup, whatever the case may be. I just won't trade for that day. I'll get up and leave the computer and go on about my day. No, this is one of those mental strategies. I'm not going to sit here and just consistently wait all day. Some people do it. There's nothing wrong with that. But I'm just saying, I'm not doing that. After 3 or 4 hours, if I see nothing happening, even if, like, say around 3 o'clock, some big price swing happens, I don't care. There's no setup for me right now. I don't see anything happening. I'm not comfortable with what's going on right now. There's nowhere for me to enter. after 3 or 4 hours, I kind of say I'm done. There's always another day to trade. There's always tomorrow. There's always next week. There's always another day to trade. I'm not worried about missing one day. The same goes if, say, I enter a few trades and I lose out on trades back to back. If I lose out, like, say, like 3 or 4 trades, I'm done trading for the day. Not that I'm angry. It's just whatever, my setups might not be right. Maybe I'm too emotional and I don't know it. It could be different things. I'll stop. Well, that's it for me today. No more trading for me today. We'll come back at it tomorrow. And the same thing again applies if I'm winning trades. Say I complete like 4 winning trades. That's it. Or if I complete 3 winning trades. That's it. I'm not doing anymore. I'll get up out my chair and I walk and go on about my day. And in the same sense, I could have one big trade that went extremely well. That's it. I'm done trading for the day. I'll come back for tomorrow.
Yeah, that will literally drive me crazy right there. Just looking at the computer all day. It's like, oh, wait, it's going to drop. It's going to drop. Ah, got it. You know,
I didn't. Let's make out. Yeah, I'm not doing all that. I only trade for a few hours.
Yeah. Because, like, if you built for it, you know, you can go ahead and do it. It depends on the person, you know, like if you got the mental for it. But if you're not, don't do it. I'm telling you, it's going to drive you nuts.
It's not even driving nuts. I've done it before, but I'm like, there's no point in me sitting here. It's almost like a job. I'm just sitting here staring at the computer. When you day trading, there's going to be some type of setup within those few hours. If there's no setup or anything you don't see, and everybody has an edge. Somebody has some type of edge. If you have an edge and you just know nothing's working, it just wasn't meant for you to trade today. Trade tomorrow. Go on about your day. Go to the club. You know, relax at home. Sip some wine. Don't worry about it. Trade tomorrow. That's what I do.
Oh my God. And then you remind me of something too, because there's people, because even if they're not at home on a computer, they be on their phones doing it too. Like they all out in public be like, yeah, I'm gonna keep an eye on this. I'm keeping an eye on it. And then, make a trade.
Now, see, those are people worrying about them them option contracts. I'm gonna tell you that right now. We sitting here out in the public, looking at the phone, worried. I'm worried about the option contract. I don't want that price to drop too much, and I gotta sell.
yeah. Those could be the people with the options too. But those the scalpers too. Like, yeah, I can't. Man, I gotta get this now. Watch me flip it real quick.
That's why I only set aside a few hours. And that reminds me, there was a meme. Who was it? Was the meme that had Bart Simpson picture on it, and at the top it had Bart Simpson. He's sleeping peacefully, and it said swing traders and long-term passive traders. They look like they're sleeping peaceful. And then
I say that
bottom, one. Yeah, it had option traders and day traders' eyes with the bangs popping out, wondering what's going to happen tomorrow when the market opens up.
Yeah, they're on that Naruto. Concentrate.
Yeah, I didn't sell that option contract today, so I gotta wait tomorrow to see what happens.
Oh man, yeah, I seen people, seeing people do it on my own eyes. It's like, concentrate. So I got to do this. Got to make this flip. Oh, no, exactly. I'm about to miss it. Oh, I lost money.
We'll go into greater detail of that. I guess the deeper cons of option trading versus, like, say, swing trading passive. We'll do that on another episode. But yeah, I think we kind of skewed away. We'll just say, in order to start out, it's nice learn at least the basics in order to read a chart. It is very helpful in knowing how to read a chart. You don't need to be the greatest. Just know how to read a chart. A little bit of technical analysis can help, and sometimes too much technical analysis get in the way. It kind of skews what you're actually seeing. Because remember that picture I showed you one day? I was doing technical analysis. It's like some crazy triangulation I was doing on my chart. It looked like I don't know what the world I was doing. It like some psychedelic triangulation or something. But it was correct because somebody else drew the same exact thing in the Discord. I'm like, oh, so I won't tripping. I'm like, something must be wrong with this chart. I couldn't have drawn this.
Yeah, I remember you told me about that one too, and then you was actually right.
Yeah, I was actually right. I was like, oh, okay. But you don't need all that. Just learn the basics.
Yeah, and then so you don't have to limit yourself but at the same time, you don't have to do too much. Like learning the basics, is good enough depending on what type of investor you are too. So, and then we'll conclude that. This is episode 4. Like I said, like me and Velli both said, this is not financial advice. You do what you want to do. This is, for entertainment purposes only. We just telling you what you can do, not telling you what to do. Because at the end of the day, you got options. You don't have to do what we do. Just find what's best for you. So other than that, though, we're just gonna close out this episode, and we ain't rich either. Just because we're talking about all these strategies.
Yeah, we just like talking about money.
We just like talking about money. But all right, see y'all. Yeah, this has been the 4th episode. Yeah, see y'all episode 5.
Yeah, see y'all next time. Enjoy y'all.
Next time.